How do fix and flip loans work? The best way I can describe this is probably in three parts, because there's mainly three parameters that a fix and flip lender looks at to qualify a borrower. The three parameters is loan to price, loan to cost, and loan to value. Now, loan to price means how much the lender is going to be leveraging the buyer or the flipper as far as the purchase price. So typically, depending on the borrower's experience, how much of a track record they have, your lenders will usually finance anywhere from 75% to 90% of the price. So that's one of the key components. The second component is the rehab cost, because a fix and flip loan finances the purchase and also finances the rehab. So the leverage that the lender is going to give on the rehab cost to the flipper is called the LTC. Typically, a fix and flip lender will cover 100% of the rehab cost. So, for example, if you're getting 90% of the purchase, that'll be your purchase money, and then you get covered 100% of your rehab cost. That will be added as a second component to the loan on top of your purchase cost. Now, your total loan amount is what we just discussed, the two parts, the purchase money and the rehab cost. But now that total loan amount needs to be under 70% of the after repair value. So an appraisal has to be done by the fix and flip lender to make sure the total loan being provided for that fix and flip investment does not exceed 70% of the ARV, which is the after repair value. Now, if it does, then that will mean that the lender will need to deduct your purchase money or reduce your purchase money, which in return will require the buyer to put more down payment. So for example, if you qualified to get financed 80% of the purchase and 100% of the rehab, but let's say the after repair value appraisal comes in lower than 70%, then what will happen is the lender will counter the buyer or the flipper and will say, we're not going to cover you 80%, we're going to cover you 75% on the purchase. So the three, again, key components to a fix and flip loan, the three parameters that you want to ask your lender when you're getting qualified is, how much can you leverage me on the purchase price, how much you can leverage me on the rehab cost, and what is the maximum loan to value my loan can go up to based on the after repair value of the appraisal.